Thank you for joining me for a look at our chart of the day. I want to start by highlighting something that's obvious right now. Tax reform is creating risks. We often hear the market hates uncertainty. In other words, stock prices reflect all the information that's known. Tax reform has created an unknown. We don't know what it's going to look like. The House version, for example, provides lower rates starting in 2018. The Senate version delays some provisions to 2019. Now, let's say you're running a large business. This impacts what you do now. So spending on plants and equipment, as is entirely predictable by the nature of this debate, is down. Here's a chart prepared by mathinvestdecisions.com, and it shows the amount of liquid assets on corporate balance sheet at the country's largest publicly traded companies. It's negative when spending is low and cash is just building up waiting for a use. As we see here, it went negative before the credit crisis. It was a sign at that time that there was a problem building in the monetary system. Companies weren't sure they could get money to facilitate operations, so they conserved cash. In hindsight, it made perfect sense and it was the right thing to do. Well, recently, this indicator has dipped into negative territory again. And it's doing so because companies are parking cash rather than buying equipment, building plants, because they may get a tax break for doing so next year, or perhaps in 2019. This has affected capital spending, and once the debate's resolved, we can expect that spending will pick up. Right now, there's a small amount, measured in billions of dollars, waiting for a decision. This is also most likely affecting employment. Companies cut back on their hiring. This chart shows the growth in payroll taxes. So the employer pays an employee, they withhold some taxes, they have to make a deposit within a few days. This chart, provided again by mathinvestdecisions.com, shows us where that money is. And what we're seeing is that money is not going to the Treasury. It's going to the Treasury, it's just not as much as we would expect. The trend in payroll taxes is down as far as the growth goes. That means companies just aren't hiring. And they're not hiring as much as they should because, again, there could be benefits for hiring later, so why hire now? Plans for capital spending and hiring are in place. Companies know what they want to do. Once reform is finished by Congress, signed by the president, they can implement their plans in the most tax-efficient manner. And that's a company's responsibility to its shareholders. When a company is told changes are coming and you might win, they need to go on hold in order to maximize shareholder value. When the holding game ends, companies should spend, that should boost earnings, that should boost stocks. We should expect a rally as soon as reform is in place.